Good morning, Bob.
Good morning and welcome to the Monday Morning Book Club.
We're talking about lots of things. I mean, we're going to hit on really mortgage rates, we're going to hit on gas prices or oil prices, and we'll talk about a book that we have been reading called Little Bets. And let's talk about, let's take a step back before we do. There's been a Greek election. Basically, the party that was opposed to austerity won.
Yeah.
Or at least they won enough to form a coalition government.
Right. I mean, I think people are getting really tired of it, and there's more and more evidence that the austerity was not the right.
Well, who likes austerity? I mean,
yeah. Well, it's not only who likes it, but in some cases, it's the wrong thing to do.
Well, the Germans may or may not think so. In fact, they don't think so. They think austerity is the right thing to do.
Exactly. Yeah. Of course, they're in the driver's seat.
They're very productive. Their bonds are yielding nothing, which is a sign of basically confidence in the European sector.
Right. Right.
And frankly, everyone in all the prognosticators in the U.S. thought that U.S. Treasuries, the yield on them was going to go up. They were going to have some sell-offs, and we were going to be way above 3 by now. And just the reverse has occurred.
Yeah, it's...
Nobody called me up, by the way, and told me this was going to happen. They all said just the opposite.
Actually, you haven't been reading Paul Krugman. Because he did say that.
He forecast oil price declines?
What?
Did he forecast oil price declines?
No, he did not forecast.
I don't know a soul that
I thought you were talking about the bonds.
Well, the bonds, he said the bonds, the prices, yes, but
Right.
that comes under the heading of even a blind squirrel can find a nut sometimes, all right? But that's okay, that's all right. We have to give credit where credit's due, right?
Well,
but no one forecast the oil price declines that I know about.
I agree with you. No one did that. And in Europe, they implemented a lot of austerity across Europe, and the result has been that they're now being threatened with declining prices.
Deflation.
Deflation.
I mean,
that's real serious, because that can generate a spiral that is devastating.
For our listeners out there, deflation is tomorrow's prices are lower than today's,
right.
And so as a result, you just say, I won't spend today, I'll wait.
Right.
And so and since many of our economies are based on consumption, if you wait and hold off on spending, then that just has the net effect of contracting an economy.
Right. Yeah,
it's terrible.
Very fast. And they're very worried. And so all of a sudden they've done a flip on everything, and now they're saying, okay, we need some big incentive programs. We need to do what the Fed did here. Expand, make money easier, just the reverse of everything they've been saying.
So let's talk about, let's transition and talk about our latest read. Last week we talked about Creativity Inc., which is about Pixar, and they had some big hits, and now we're going to transition and talk about Little Bets.
Yeah.
What did you think about the book in general?
I thought the book was interesting in the sense that it talks about some things that we've experienced in building this company, and that there's this mindset a lot of times that people think, well, an innovator or an entrepreneur just has a great idea and they go out and build it and everybody comes.
No, it's not that way at all.
It's not that way at all. And even today, as with all the experience we've had, we still have situations in our company where our employees want to go out and build the next big thing and just assume that they know better than anybody exactly what it should look like,
And in reality, the market votes.
The market votes, and what they
Clients
talk about it, right, and what they talk about in here is that successful companies that are built by entrepreneurs often are companies where they increment in very small directions and see how the market reacts and then adjust, and constantly adjusting rather than trying to take a big step and create something brand new that way.
And it's much more profitable if you do it that way.
Right. Well, that's the other thing they say, is fail quickly.
Right.
If you're going to make a mistake, do it quick so that you can move on to the next thing and adjust.
And learn, even though you think it's fantastic, learn that this just does not work. The market does not like this.
Right, and sometimes that's because you're trying to take too big a step.
Could be.
They're comfortable here,
right.
and you can convince them to move a little ways, But you take a big step and no one, they're not interested or they're afraid of it or whatever.
So we've got all these examples throughout Little Bets about people that took little steps and people that took big steps.
Right, right.
And if you go back and you look, let's just take Apple as an example. And the iPod, which was the precursor to the iPhone, it has not been out that long. In addition to that, Apple was not the first MP3 player.
Right.
Others did that. And so, but what they did is they incrementally improved it. The iPhone, the first iPhone, had some things nothing else had, but not much.
Now, it's just again, taking a different approach, but just doing it in small steps. I thought that one of the companies they feature a lot in this book is the one that was the subject of our last book, and that is Pixar.
Right.
And they talk a lot about the fact that Pixar started in this direction, decided that wasn't going to work.
They moved to hardware. They had this fantastic rendering computer.
Right.
And it didn't work. Didn't sell. They sold a few.
300, yeah. And but then the market dried up, and it was very expensive, and there wasn't that big of a market to begin with.
So they said, okay, we'll sell software.
So they did software for a while, and that wasn't much of a win. So they moved in, and sort of just on the side, they started making these animations primarily for commercials.
Right.
And that's what turned out to be successful, and then they moved into that direction.
And the rest is history. And because Toy Story has so many themes going through it.
Oh, yeah.
And so a company, when you build a company, there's so many themes going through that company. And the question is, these little incremental things you do make huge differences. So I want to tell you a personal story.
Right.
I flew beside one of the top 5 people at Southwest Airlines. And she said they started serving 3 cities in Texas. Maybe I've already defined who she is by saying it's a she.
No.
But they serve 3 cities in Texas. They serve Dallas, Austin. I think it was Austin and Houston. Maybe San Antonio was in there, but I think Austin was in those, either San Antonio or Austin. Anyway, Dallas, Houston, and Austin or San Antonio. And they had trouble getting ridership, so one of the things they did is they decided to start giving away free drinks. And they became the #1 distributor of alcohol in Texas. And they got worried because they were going to be regulated by the Texas Alcohol and Beverage Control Commission. Well, come to find out, they didn't have jurisdiction. This was an airline, right? And they were giving it away. They weren't giving it away on the ground, they were giving it away in the air.
Yeah.
Okay, so having said all that, you can imagine their ridership, what happens. Just this little thing, and for $39 or $29 at the time, you basically got all the beer or all the booze you could drink. It's fast, just that one little thing. And guess what happened to their planes?
Full.
They were full, and the people were getting off bombs.
Now all I get is peanuts.
So you like to go back to the old days, right?
Yeah, exactly. Yeah. So now this was on Delta. You were talking.
This was on Southwest. No, it's Southwest. So having said all that, the little incremental changes that you make, it's amazing. We're going to see some changes in banking. I think security and other issues are driving some changes. Think about your ATM. Basically, you have to have a card, something you have, plus something you know, typically a 4-digit PIN. Do you think 4 digits is enough?
Well, it's been shown not to be enough because it's fairly easy for people to capture that.
Okay, so we're going to go to something else.
Yeah.
And so one of the things Apple has tried, it appears, the initial efforts appear very successful, is they've tried to change the customer experience with paying. So who you are, by putting your thumb or fingerprint on that device, something you have, the phone, and something you know, a code, right? So basically they're trying to change the consumer experience. Do you think we'll ever walk up to an ATM and do something like that and beam the ATM and get some cash out?
I do, and there'll be some kind of recognition, whether it be the thumbprint on an Apple or an eye scan. There'll be something that will identify you more specifically than what we have today.
So does the bank know who you are? They have this big initiative called Know Your Customer. Do they know who you are when you walk in?
Well, they may know what your retina looks like, but they,
Most of them don't know who you are.
they absolutely don't, right?
And so that's one of the little bets that a bank can make, identifying who you are when you walk in their premises or you connect to them remotely.
Yeah. Well, we're sort of out of time, but one of the things that we've done over the break was to have our client conference, and we talked about a really interesting book at that conference too.
Yes, we did, and we talked about both an interesting book and an interesting book of business and an interesting book of clients.
Right, exactly.
And so you're talking about Flash Boys,
Right,
and we had Michael Lewis, who as a speaker, along with Brad Katsuyama, who was featured in Flash Boys, and that's been a fascinating discussion.
That was amazing.
Our clients loved it. Well, anyway, we're out of time. This is FNC's Morning View. We'll pick this discussion up next week. You all have a fantastic week. Bye, Bob.
Goodbye.